Hello, everyone. This is Jordan. Welcome back to the Daily Gold YouTube channel. And for those who are new, welcome to the Daily Gold YouTube channel. Thank you so much for tuning in on this afternoon of Friday, September 19th, 2025. Hope you had a great week. And for precious metals, it was another great week. What do you know? Another week, more gains in precious metals. Silver up, I believe, about 2% on the week. Gold up 1%. You look at the miners, GDX, GDXJ, SILJ, they're all up 4%, 3%, 2% on the week. So gains across the spectrum. And I have to tell you, it looks like the little weakness that we saw in the sector has been bought. And we have to talk about the possibility that we get a mini blow off here in precious metals before an intermediate term peak. Now, I'm just talking about precious metals here. I'm not talking about the other markets. So let's delve into the charts and talk a little bit more about what the possibilities are. So here is our market overview. These are daily bar charts going back to the end of December of last year. So we have a good 9 to 10 months here of price action. We can see gold. We know here, close the week just below 3,700. This is the spot market. Remember, there's two measured upside targets here. We have 3,750 and 3,950. And also, of course, there's that magic 4,000 number. So let's keep those in mind. We're not that far away, nearly at 3,700 right now. The other thing for silver, and I'll probably say this 3 or 4 times in this video, so I'm just letting you know now. I apologize for repeating myself. There is the chance that we're going to see silver pop up to 49 bucks an ounce before the sector correction really takes hold. And another thing to keep in mind is after extended moves in the sector, I'm not talking about major peaks, but after intermediate term peaks, you typically get a mini blow off in silver where it really outperforms at the end. And so it could be setting up for that. It's not that far away from 49. You could see it push up above the $43, $44 resistance that I've been talking about. And then it just needs some more buying for a day or two and it can pop up to 49. And then you have the top that I've been talking about for a month. So keep that in mind. Gold against the stock market, not that strong. Nothing else really of note here. Here we see the yield curve still going sideways. Again, to really see a recession, you want to see this thing pop higher like that. I'm not saying it can't happen, but as far as the next few months, not going to happen. Maybe sometime next year. Stock market also pushed higher. So that's where we are in the big picture. But let's delve down and get more specific, get into more of the details with precious metals. So starting off here as usual, daily candle chart for gold here, daily candle chart for silver right here. Then at the bottom, we have the gold-silver ratio, which I'll get to in a moment. I said it earlier. This breakout in gold right here, this beautiful gap up, this projects to a measured upside target of 3,750 and also 3,950. And something else to keep in mind, when did gold hit 3,000? So gold hit 3,000 right about this time, late March. Now, I've mentioned this in past videos, but not recently. Cup and handles historically, they hit the measured upside target, when they hit the measured upside target, they hit the log target 6 to 12 months after that. So gold reached the measured upside target here. So that means anytime from September, which we're in, until March of 2026, gold could hit 4,000. That's the measured upside target. So that's a third target to add to the mix. So love the short-term action here in gold. We can see here 3,600 is short-term support. And I wouldn't be surprised if this pushes higher like that, up to the 3,750 upside target. Silver, on the other hand, we can see here, beautiful day today, up to 43 bucks in the spot market. What's more encouraging for silver, look at this. This is gold divided by silver, the gold-silver ratio. And this thing recently has lost the 200-day moving average. See how it held above the moving average here? Held here, failed around here, rallied back, another rally here. So now it's starting to weaken. Is this a last gasp right here before this thing could plunge like that? So maybe you see this, again, closed at 85.64. Maybe it falls down to 80 or a little bit below. What's 80? Get $50 silver, 4,000 gold. So maybe that's what we're headed to, again, before the interim or really intermediate term peak in the sector. And I mentioned this last week, but it bears mentioning again, and that's the gold quarterly chart. Looking at the RSI here, and this is where we are. We are at the most overbought early in a bull market. That's the key, early in a bull market. I don't care about the readings right here or right here. We're early in a new secular bull market. And so if you compare that, we're similar to where we were just before the peak in 1973. And again, there's three major breakouts in gold's history. You have the one right here in 1972. Again, the greatest breakout of all time. The second greatest breakout of all time is coming. That's when silver breaks 50. But the other two breakouts for gold in its history, you had this one here in 2005. This wasn't to a new all-time high, but nevertheless, it was the third most significant. This one here, beautiful breakout from the cup and handle. That is the second biggest breakout in gold's history. Of course, this one, obviously the biggest. And so we see what happened to the RSI. We can see what happened here, where it was really 1973 before we got to as overbought as we are now. And then we didn't even reach that point even into 2006. We didn't even reach that point yet compared to where we are here and now. So here, gold corrected 23%. This correction here in 73 was 28%. Now, if you actually do the math and we starting from here and this low, the 22 low, and compare this move to this move here, and then also this move here, gold right now is not as extended as those other points. So for me, I think we'd have to see gold. You would need to see this blow off to the mid 4,000s if we were going to see 20%, 23% type of correction. If the peak is 4,000, maybe gold corrects 15, 16, 17%. So that's what I'm thinking. I'll let you know if my opinion changes. So the final point here is, even though the RSI is as overbought as this point here and close to here, and that we had 23% decline here, 28%, we are not as extended as those points. So very important to keep in mind. Now, silver, the quarterly close is coming up in a week and a half or so. The quarterly all-time high, I believe, is about 37.60. That's right here. That's a quarterly all-time high close. Now, this resistance here, this open was 39.90. So there's two resistance points here. This is 39.90. You have that. And then you also have 37.60, the all-time high. So silver's at 43 right now. I think we're looking at silver making a new quarterly all-time high close. It's fair to say I don't think it's going to have a violent reversal back below 38. But the question, though, is, are we going to see it close above 39.90? But this is just a great setup for silver, because if we get that mini blow off, we get a peak at 49 in the next couple weeks or so, then silver's set up where it can correct for 6 or 9 months or whatever, and then it sets up the second greatest breakout of all time. So there could be more juice in this move for silver up to 49 or so. And one reason why there could be more juice in the move is because silver against the stock market, this broke out in the last week or two from a 4-year-long base. So silver against the stock market, this is at a new 4-year high. And so here's silver against the 60/40 portfolio. It's trading at a 5-year high, and this has no resistance until this point, till we get to the 2020 peak and the 2016 peak right here. So this should continue to move up here, and then you get this beautiful 11-year base, silver against the 60/40. And so eventually, when this breaks like that, after the coming correction, that's going to set the stage for silver to break 50. But short term, what we're seeing here is there's more room for capital to come out of conventional assets and into silver. So relatively speaking, silver's in good shape, and that's what could power the move up to 49. Now, before I get to the stocks, I just want to thank all of you who have joined the Daily Gold Premium. Thank you so much for your support. I appreciate your business because it's you that allows me to do the work that I love to do. And in the Daily Gold Premium, what we do is we're looking for combination of the highest quality companies that also have the highest upside potential. And we're looking for companies that can at least do 5x upside over the next 2 or 3 years in the current cyclical bull market, which should last at least another 2 or 3 years, maybe 4 years from now. But we are in a very good window here where I really think that we could get a little bit of a blow off here. Then we have a correction into next year. That correction should set the stage for really a spectacular move in the sector. Silver going above 50, gold going well above 4,000. And if you own juniors and minors, I think our service can really benefit you. We show a top 10 company table where you can see all the information or most of the information you need to know about our favorite companies. And also we have a watch list company table we're working on, or we also have a top 10 silver company table, which I think we're going to publish this weekend, probably going to focus on the silver stocks this weekend. So there's just so much research and work that we put into these updates, and we'd love to see you join. Thank you so much. And so moving on, let's talk about the stocks. So people, we are coming to an intermediate term peak in the sector. You just cannot ignore this data. Now, this is the new highs in GDX. The moving average here is the 20-day simple moving average, 39.4% right now. This is actually where it peaked, this line right here. This is 39.7%. Look at where the other peaks are. You had that peak here, that peak here, that. You can see we are just dwarfing, right now, we are dwarfing the other peaks in the sector. And look at the chart here. You can see this. This is almost a rhino horn on this long-term chart. So the sector is coming up to an important interim peak. Whether it's next week or it takes 2 or 3 weeks, we are coming to an intermediate term peak here. And I don't want anybody to start buying aggressively and thinking they're getting in at the best time. This is a time where you let your winners run, you trim a little bit, but you understand we could get a blow off here in the coming weeks. And after that, it could be another 6 or 9 months before the sector starts to make its next big leg higher. So please keep that in mind. We have to look at both sides of the coin always. And just more evidence of that, here's GDX and the new highs going back to 2015. And these moving averages here are the exponential moving averages. So this moving average here is the 20-day exponential. This is the 50-day exponential of the new highs in GDX. And one thing I want to point out is when the 20-day moving average peaked, it peaked right here. And so that wasn't the top for the miners in 2016. They went a little bit higher. So you can see this in many markets where the strongest momentum or the strongest breadth, that comes first, and then you peak after that. So here's another example of the 2020, the COVID boom peak. That occurred here, but we peaked, I don't know if it was another week or so after that. So we've already made the peak here in the 20-day exponential moving average of new highs in GDX. But GDX has gone a little bit higher. So this doesn't always happen, but it's not abnormal. So we could see something like this really quickly in the next week or two, and then we peak and come back down like that. And so here's gold stocks against the 60-40 portfolio, GDX here against the 60-40, GDXJ against the 60-40. And I'm really interested in this, where GDXJ, this is coming really close to the 2020 and even the 2016 peaks. So I mentioned silver against the 60-40. This is setting up where this could hit resistance. Then we get the correction, and then we have this beautiful breakout of a 12 or 13 year-long base, sometime next year. GDX against the 60-40. So this has already broken out. You can see here, and this is a daily chart, by the way. So this is already broken out, but I want to show you here. This is a weekly chart. So here's GDX against the 60-40 weekly data here. And you can see this is better, this breakout here. And so this tells us money is exiting stocks and bonds and moving into miners. This is the XAU. But we're going to hit a correction here very soon. And so this could come back a little bit. You could get a retest. This could come back. And so finally, let's talk about the silver stocks. So we can see here, this is almost making a rhino horn. We can see here, SIL, the large cap, SILJ, the juniors. So the measured upside target, if we take 20 and 45 or 47 here, that takes us to 73, 74, maybe 75. So there is this resistance here at 65. And if this doesn't slow SIL down immediately, you know you're in a mini blow-off if it just keeps moving higher like that. That's what happens when you get a blow-off or a mini blow-off. So if we see next week, you see this thing 60, 68, 69, that's more confirmation we're in a blow-off move here. And so again, the measured upside target from this, that projects to, what did I say, 73, 74. So you keep that number in mind because you get a mini blow-off and you're in the high 60s, 69, 70, 71. You know you're getting really close to the peak. Now, SILJ, it's a little different, but is starting to accelerate. But the measured upside target from this breakout, I think the minimum here would probably be 26, 27. So there's a little bit more to go. SIL is a little bit closer. This is a small ETF, so I wouldn't rule anything out. But that's where we are for the sector. I thought we would hit an interim peak. Hasn't quite happened. And so we have to look at the other side of the coin. An interim peak is really likely, but at the same time, are we going to get a mini blow off here in the sector before we make that intermediate term top? Let me know what you think. Leave a comment. Would love to hear from you. Hope you had a great week. Hope you have an even better weekend. Thanks so much for supporting the channel and my work. I really appreciate it. We'll talk to you guys again in Macro Mondays.